Stop whatever you're doing right now. I don't care if you're in the shower, on the toilet, or about to fall asleep. Get out, dry off, and listen. Silver crashed 31.4% in one day. A single day. You know when something like this last happened? March 1980. I wasn't born yet. You probably weren't either. Gold dropped 9%, its worst session since 1983. Bitcoin fell below $78,000. $2 billion in forced liquidations across the crypto market in just 3 days. And while all this was happening, you know what the news was saying? That the market corrected. That it's normal. Don't worry, keep consuming. Sure thing, buddy. Go back to sleep. Big Brother's got you covered. Welcome. I'm Carter, and today I'm going to tell you what's really going on, because something has broken, and it's not a correction, it's not normal volatility. It's the beginning of something we've been warning about for years. The biggest attack on the Federal Reserve in 100 years of history has begun. An open war between the White House and the most powerful central bank in the world has begun. The attempt to control who decides the price of money has begun. And if you have savings, investments, a mortgage, or you simply pay taxes, this affects you. This is going to be long. This is going to be dense. But when you're done, you'll understand things that 99% of people don't understand. Let's go. Let's start where nobody else is starting. On January 10th, 2026, just 3 weeks ago, the U.S. Department of Justice sent grand jury subpoenas to the Federal Reserve. Subpoenas threatening to criminally indict Jerome Powell, the Fed chairman, the man who controls interest rates in the most powerful country on earth, the one who decides whether your mortgage goes up or down, the one who can tank entire economies with a single sentence at a press conference. They're threatening to throw him in jail. Let that sink in for a moment. In 110 years of Federal Reserve history, this has never happened. Never. To any chairman, under any administration, Democrat or Republican, until now. The official reason? Get ready, because this is good. Supposedly he lied to Congress about some building renovations. Yeah, you heard that right. Buildings. Turns out the renovation of the Fed headquarters in Washington went from costing $1.9 billion to $2.5 billion, $600 million in cost overruns. And according to the charges, Powell wasn't transparent enough with senators about why the price went up. That's the official story. You buying it? Me neither. Because if the Justice Department went after every official who lies to Congress about cost overruns, half of Washington would be behind bars. But funnily enough, they're only going after the guy who controls interest rates and has spent an entire year refusing to cut them as much as the president wants. What a coincidence. And here's where this turns into a movie. A bad one. The kind you watch and say, this can't be real, it's too obvious. Powell did something no Fed chairman has ever done in history. He recorded a video. On a Sunday night, he posted it on the Federal Reserve's official social media, and what he said deserves your full attention. He said, and I'm quoting directly, that the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public rather than following the president's preferences. Read that again if you need to. The Fed chairman publicly accused the White House of using the Justice Department to pressure him on monetary policy. On camera, his face, the Fed logo behind him. This is a declaration of institutional war. This is the head of the most powerful central bank on the planet saying publicly that they're trying to blackmail him. And nobody is talking about this the way they should be. And you know who's leading the investigation? This is where it gets even better. Jeanine Pirro. That name might ring a bell. She's a former New York judge who became famous as a Fox News host. For years, she was one of the loudest voices defending Trump on television. She said Trump's enemies were traitors to the nation, that they should go to jail, that there was a deep state conspiracy against the president. She hosted a show where she basically called for the head of anyone who criticized Trump. Well, Trump appointed her as U.S. Attorney for the District of Columbia, and now that same person has the legal power to criminally indict the Federal Reserve chairman, the same one who spent a year resisting public pressure to cut interest rates. It's almost like someone's following a script, and it's not the script they're selling you on the news. If this kind of information seems important to you, if you think people should know what's really happening with their money, hit that like button. It costs you nothing and helps this reach more people like you and me, people who work, who save, who try not to lose the little they have while the people at the top play monopoly with the economy. But wait, it doesn't end there. Senator Thom Tillis, Republican from North Carolina, came out that same day with a statement nobody expected. He said he'll vote against any Fed nominee until the Powell investigation is resolved. And this matters because Tillis sits on the Senate Banking Committee, the committee that has to approve all Fed appointments before they go to the full floor, with a Republican majority of just 2 seats. 2. Meaning if Tillis votes no, along with the Democrats, Trump's nominee doesn't pass. Doesn't matter who it is. So let's recap what we've got so far. A criminal investigation that seems designed to pressure Powell, a senator from Trump's own party threatening to block his replacement, and on top of all that, the Lisa Cook case at the Supreme Court. Lisa Cook is another Fed governor that Trump tried to fire a few weeks ago. Just like that. No clear legal grounds. She sued, and the case went to the Supreme Court. The justices have to decide whether a president can remove Fed governors whenever he feels like it. If they say yes, central bank independence is over. Any president will be able to purge the Fed until they only have people who obey them. Think about what that means. And Trump desperately needs someone to cut interest rates. Why all this urgency? Why this institutional circus? Because the debt is eating him alive. And this is where I need you to pay close attention. Let's do the math together. This is what nobody explains on the news because they'd rather talk about the weather or football. As of January 7, 2026, according to the latest official report from the Joint Economic Committee of Congress, the U.S. national debt stands at $38,430 billion. Not millions, trillions, with a T, as in time bomb. To give you an idea, last year the debt increased by $2,250 billion. That's $8 billion in new debt every single day, $334 million per hour, $5.57 million per minute, $93,000 per second. While you were reading this paragraph, America's debt grew more than you'll earn in your entire life. And the wheel doesn't stop, it never stops. And here's the number that should keep you up at night. Interest payments on that debt now exceed $1 trillion annually. $1 trillion, just in interest. The United States pays more in debt interest than on military defense, more than on education, more than on healthcare, more than on infrastructure, just interest. They don't tell you this on the news. The talking head economists who get paid to tell you everything's fine don't explain it, the same ones who in 2008 said the housing market never goes down. The same ones who in 2022 said inflation was transitory. They're wrong more often than a psychic octopus predicting soccer matches, but hey, 7-figure bonuses every December. That's guaranteed. The system works great for them. You and me, we just keep rowing. Interest rates are currently between 3.5 and 3.75%. The Fed held them there at the January 28th meeting, less than a week ago. There were 2 dissenting votes from governors who wanted to cut, but Powell held firm. Trump has publicly said, multiple times, that rates should be 2 or 3 points lower. Almost at zero, as if inflation doesn't exist, as if the laws of economics don't apply to the United States. What happens if you cut rates when inflation is still at 2.9%, well above the 2% target? Let me spell it out for you. Inflation. More inflation. Your money worth less every day. Your paycheck buying less. Your savings evaporating while prices rise. But don't worry, GDP is growing. That's what matters. The big number going up. Your fridge getting emptier every month? That's secondary. But Trump needs low rates. Not because he cares about your mortgage. Don't kid yourself. He needs low rates because with $38 trillion in debt, every percentage point of interest costs hundreds of billions more per year. Pure math. It's like a guy making $30,000 a year with a $3 million mortgage. He can't even cover the interest, so he needs the bank to lower his rate. But the bank says there's inflation and they can't cut without creating bigger problems. And the guy, instead of accepting reality, starts threatening to sue the bank manager over some renovations at the local branch. That's what's happening. On the scale of the world's largest economy. Now let's talk about the chosen one, Kevin Warsh. On January 30th, the same day markets tanked, Trump announced his nomination to replace Powell when his term ends in May. And here's where the story gets really interesting. Because Warsh isn't what you'd expect. He's 55 years old, studied at Stanford, got his law degree from Harvard, worked at Morgan Stanley in mergers and acquisitions, those places where decisions affecting millions of people are made over $8 croissants while admiring the Manhattan skyline. He was an economic advisor to George W. Bush at the White House, and in 2006, at just 35 years old, he became the youngest Fed governor in history. The youngest in 100 years of the institution. Oh, and one minor detail, he's married to Jane Lauder, heiress to the Estee Lauder cosmetics empire. Billions in family wealth. In case you were wondering if this man understands the problems of the average worker who can't make it to the end of the month. In case you thought he'd be thinking about you when he makes decisions that affect your mortgage rate, these people don't live on the same planet as us. They have financial advisors managing fortunes. We have to decide whether to fill up the gas tank or make it through the month. But what matters isn't his resume or his bank account. What matters is what Warsh did when he was at the Fed, because he was there during the 2008 crisis, the worst financial crisis since the Great Depression, banks collapsing, people losing their homes, the global financial system on the brink of collapse. And while all his colleagues at the Fed were voting in favor of bank bailouts, massive stimulus, and printing money like there was no tomorrow, Warsh was the guy who said no. He voted against quantitative easing. He warned that the stimulus was excessive and dangerous. He predicted runaway inflation that took more than a decade to arrive. He was wrong on the timing, but he was wrong on the side of caution, not recklessness. And in 2011, when he saw he couldn't stop the money printer, he resigned. He walked away, threw in the towel. He'd rather leave than stay endorsing something he didn't believe in. Warsh was what insiders call a hawk, someone who prioritizes controlling inflation above everything else, even if that means high rates, slower growth, and short-term economic pain. The opposite of what Trump wants. The opposite of the money printer running day and night. So why the hell would Trump pick someone like that? Here's the catch. The Warsh of 2026 doesn't sound like the Warsh of 2011. In recent months, he's criticized Powell for not cutting rates fast enough. He's publicly said the Fed made serious mistakes. His messaging has magically aligned with what Trump wants to hear. Last year, he literally said rates could be cut significantly so that 30-year mortgages become affordable and the housing market starts working again. That doesn't sound like a hawk. That sounds like someone who wants the job and is willing to say whatever it takes to get it. The million-dollar question is which Warsh is going to show up when he sits in Powell's chair. The one who voted against stimulus in 2008? Or the one who's now parroting what Trump wants to hear? Nobody knows. Not Wall Street, not European central banks, not the people who get paid millions to analyze this stuff. They have inside information, they have contacts, they have access. We have to piece things together with what they let us see. But that doesn't mean we can't understand what's happening. If you've made it this far, it's because you want to understand, not be treated like an idiot. Subscribe if you haven't already, because what's coming in the next few months is going to be historic, and somebody needs to tell you about it without the spin. And that's why what happened Friday happened. Listen carefully because this explains the crash. For months, gold and silver had been climbing nonstop. Gold topped $5,300 an ounce. Silver hit $116. Historic records nobody expected. Why were they rising so much? Because investors were betting Trump would nominate Kevin Hassett, the director of the National Economic Council. A guy with no central banking experience who would basically do whatever he was told without blinking. The investment thesis was simple, and everyone was following it. Trump puts a puppet at the Fed. The Fed loses its independence. They print money without control to finance the debt. The dollar devalues. Buy gold and silver as a safe haven because they'll soar when the dollar tanks. And it worked. For months it worked. Funds loaded up on gold. Speculators went leveraged on silver. Everyone moving in the same direction. Until Friday. When Warsh's name came out instead of Hassett's, the market went into shock. Warsh isn't a puppet. He has a track record as an anti-inflation hawk. He could keep rates high even if Trump pressures him publicly every single day. Suddenly, the entire investment thesis collapsed in a matter of hours. If Warsh is truly independent, there's no dollar collapse. If there's no dollar collapse, why would you want gold and silver at all-time highs? And the stampede began. It wasn't an orderly sell-off. It was pure panic. Margin calls everywhere, leveraged positions blowing up like popcorn. Silver dropped 31% because too many people were betting in the same direction with borrowed money, money they didn't have. When the market turned, they couldn't get out in time. They got liquidated, wiped out, the worst day in 46 years. And Bitcoin didn't escape, the favorite child of everyone who thought we'd found a way out of the system. It hit $115,970 in September 2025, all-time high, ETFs approved, institutional adoption through the roof, the halving complete. Everyone talking about 200,000 by year-end, influencers posting stories from Dubai saying, if you don't buy now, you'll regret it for the rest of your life. 6 months later, it's at 78,000. It's lost 33% from its peak, 4 consecutive months in the red, the worst streak since 2018. Last week, $1.7 billion flowed out of crypto investment products. Out, not in. Sentiment has completely shifted. I know what you're thinking. But Carter, Bitcoin is the hedge against inflation. Bitcoin is digital gold. Bitcoin goes up when the Fed prints. In theory, yes. In practice, Bitcoin still behaves like a risk asset. When Microsoft drops 10% like it did last week, Bitcoin drops. When there's fear in the market, Bitcoin drops. Perfect correlation with tech stocks, whether we like it or not. Okay, breathe. Because now it's time to be fair and present the other side. Some analysts say Warsh's selection is actually good news, that the market was overvalued and needed a correction. That Warsh, precisely because he has credibility as a hawk, has more room to cut rates without triggering panic. It's the Nixon goes to China paradox. Only a declared anti-communist could approach China without being called a traitor. Only an anti-inflation hawk can cut rates without being called irresponsible. The dollar rose after the Warsh announcement. That's a sign of confidence. Institutional investors prefer someone with their own judgment over a puppet who might do something crazy. And Warsh knows the Fed from the inside. He was there during the worst crisis in 80 years. He knows where the buttons are and which levers to pull. That's the optimistic argument. And it has its logic. I won't deny that. But there's a problem no Fed chairman can solve. Doesn't matter if it's Powell, Warsh, Hassett, or Warren Buffett risen from the grave. The problem is mathematical and has no clean solution. The United States has to refinance trillions of dollars in debt every year. Trillions. When those bonds mature, it has to issue new bonds to pay off the old ones. It's a wheel that never stops. If rates are high, the new bonds cost more in interest. Interest payments rise. The deficit explodes. If rates are low, there's inflation risk and the dollar loses value. Your purchasing power evaporates even if the numbers in your account don't change. Janet Yellen, the former Treasury Secretary, warned in January about something called fiscal dominance. Sounds technical, but it's simple. It means the debt is so massive that the Fed loses control of the situation, that it doesn't matter what they do with rates, because the mountain of debt dominates everything. Yellen said the preconditions for that are strengthening. That debt is heading toward 150% of GDP. Right now, we're at 120. The threshold is getting closer. So what am I doing? I'm not your financial advisor. I don't know your personal situation, but I'll tell you what I'm doing in case it helps. First, I don't panic sell. Ever. The worst financial decision you can make is selling at the bottom because fear got to you. If you sold silver on Friday when it was down 30%, you locked in that loss. It's already bounced back some. Panic is the worst advisor in the world. Second, I keep liquidity, cash on hand, not everything invested. Opportunities show up when there's blood in the streets, but you can only take advantage of them if you've got ammunition. Third, zero leverage. Those $2 billion in liquidations were from people who invested with borrowed money. When the market turned, it wiped them out. Leverage is like driving a Ferrari with no brakes. Very exciting until it isn't. Fourth, I think long-term. If my horizon is 10 or 20 years, what happens this week is noise. Important noise, but noise. And fifth, I actually diversify. Not everything in the same basket. So when something tanks, something else holds up. This isn't financial advice. It's what I do. You decide what you do. One last thing before I wrap up. Everything I've told you today is connected. The investigation into Powell isn't an isolated case of corruption over building renovations. It's pressure on monetary policy. The Warsh nomination isn't simply choosing the best candidate. It's trying to find someone who'll cut rates without destroying the dollar's credibility. The gold and silver crash isn't a normal technical correction. It's the market recalculating expectations about Fed independence. Bitcoin's drop isn't because the technology stopped working. It's because in times of uncertainty, money runs toward the familiar. And the $38 trillion debt isn't a problem for your grandchildren. It's a problem for right now, for this year, for this decade. Something has started. Call it a reset. Call it a transition. Call it whatever you want. But it's happening right now. And most people haven't noticed yet. The question is whether you'll already be prepared when they do, or whether you'll be running with the rest of them. Take care of yourself. See you in the next one.